Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 9th of November. Obviously, this week has been dominated by the US election. We've yet to have the actual outcome, but in the meantime, the markets have been taking a view. A Joe Biden victory, which was previously not going to be welcomed due to corporate tax hikes and possible regulatory reform, is still possible, but it seems that in terms of the House and the Senate, we're going to get some split power, and that means the status quo may well be maintained. So on that basis, it's been a fairly positive week for US markets in particular. On top of that, of course, we've had the additional lockdowns now coming into force, but equally, there have been some positive noises coming from the likes of AstraZeneca that some trials could be resulted by the end of the year, which would then result in a rollout shortly after, subject to regulatory approval. So what that means is that in the year to date, the Dow Jones is now down just 0.5%. The S&P 500 is up 8.6%. The Nasdaq has recouped some of its previous strength, now up 32.5% in the year to date. And even the FTSE 100 has had a reasonable week, although it remains down 22% in the year to date. So turning to next week, some of that election noise is likely to spill over. Obviously, the COVID vaccine, or lack of it, will also continue to be a theme. In terms of the US reporting season, that's starting to wind down. A couple of obvious names to mention next week are McDonald's and also Walt Disney, and it'll be interesting to see how the Disney Plus channel has done, given the fact we're potentially going into a new lockdown phase. In the UK, we've got a trading update from the house builder Persimmon. Despite the tailwinds of the year, in the form of the stamp duty holiday, mortgage availability, and also the ongoing supply-demand imbalance in the housing market, the shares are actually down 3%. So it'll be interesting to see what they say about their forward order book and whether buyers have been returning to the housing market. Also, a third quarter trading update from Flutter Entertainment. This is the company which owns Paddy Power and Betfair and had a very good year to date so far. The shares are up 51%. Some of that's been driven by the fact that there now has been the return of major sporting events, especially football, for people to be betting on. The online part of the business had actually held up quite well even during the pandemic as people switched to the likes of poker and casino. And finally, half-year numbers due from Burberry. It's been a tough year for Burberry. The shares are down 33% so far. Obviously, it's an Asian-focused company. Now, that's an interesting thing to look out for because obviously China, as well as being first into the pandemic, has also been first out. The economy is starting to recover well. That should bode well for Burberry. On the other hand, we still have some political tensions around Hong Kong. It'll also be interesting to see how their digital transformation has been going on. Obviously, Burberry, like many retailers, has been leaning on the online channels. Thank you for watching. Have a great week.